Welcome to the Wiser Wealth Management Roundtable. We believe the best financial advice should always be conflict-free. I'm your host. Guiding you to financial freedom is my co-host today, Robert Swarthout. Hi, Robert.
Hey, good morning.
We are doing this new series now. Once a month, we're going to focus on cryptocurrency, digital assets, lots of names that we can throw out there to call the same thing, blockchain. It's always interesting to prep for these. I feel like I learn something each time. But why don't we do a quick recap? So it's been about 4 weeks since we last got together. What's happened with just price movement?
Yep. So Bitcoin, we last met on October the 20th. We'll say that, to be clear. Bitcoin was at 63,812. Today is at 56,739.
And that's November 23rd, because this will play, I guess, next week.
Yeah, today is, date's important again. Ethereum was at 3,861. Today's at 41.70, so it's up a little bit. Bitcoin obviously being down. XRP was at $1.10. It is at $1.05 this morning. So, some up, some down. In general, the market is slightly up because the total market cap back in October was 2.53 trillion. And today it's 2.64. But largely the market's been sideways for the last month. Bitcoin obviously has been up and down in that period of time. It did set a new all-time high back on November the 10th of 68,769. It has since pulled down roughly 23% from that. And it's interesting, if you look back in 2017 when Bitcoin went from $600 to begin the year to 20,000, everybody's going nuts at Christmas time.
Right.
There was 2 times in that last Q4 that year it pulled back 23 and 24% at 2 different times. So this is par for the course, I guess.
Well, it's definitely a volatile investment.
Mm-hmm.
You said the market cap is at right now at 2.64 trillion. I guess in comparison, if you think about it, Apple, single company, obviously a very big company, has a market cap of 2.5 trillion. Mm-hmm. So just to put that in perspective. But it is not to say that the total market of crypto is small. It's just saying that it's come a long way very, very fast.
Yep.
The S&P 500 has a 40.3 trillion market cap. The entire world is about, of equities, stock, 92 trillion. Global bonds are 119 trillion. So 2.64 trillion is still small, but it's growing.
It's growing. I mean, I think
at a very fast rate.
At the depths of the COVID crisis back in March of last year, I think, if I remember correctly, the market cap was 350 billion. So it's roughly a 7 to 8x or from that. But you're right. It is in the finance world. It is still peanuts. So
when you look at the makeup of crypto, 46% is what probably is a household name now, which is Bitcoin. Mm-hmm. A lot of people still are struggling with what's its purpose,
right?
but that's one of right now. It changes daily. 13,285 different digital assets or coins or crypto or however you want to describe it, I guess.
I don't know if that number ever goes down. Every day new things are launching, but I don't think that a crypto goes away necessarily. So I guess I would need to
counting higher.
It's just ticking higher.
Well, even if you have a couple shut down, there's a lot more to take its place. So
it's shut down, but also shut down in the sense that maybe no one's using it, but it still may be kind of out there in the internet ether, effectively.
Right.
Not ether as in Ethereum, but just like the wild west of the internet. So it's additive. It's not subtractive at any point.
So I think a lot of people are struggling right now with, okay, what is it? What is it supposed to be used for? We talked about in the past about what a non-fungible token is, and basically it's as you put it, it's a JPEG.
Some GIFs, some short videos, but yeah, basically fancy JPEGs.
So people are using these coins to then buy these assets. So I have one child that we've struggled with video games with. The other 2 could care less, and they're into their sports and crafts and stuff. But with him, he's always after V-Bucks.
Okay.
And I'm not buying V-Bucks. V-Bucks is what you use like inside a game. So if he wants to buy a new avatar for his gamer, then he gets these V-Bucks that he can buy through Microsoft or wherever, Target, and just the worst place. They put him at the checkout line.
or the best spot.
Yeah, and unfortunately, there's people at school that I think their parents have probably spent $3,000 on V-Bucks.
Right.
And I'm the dad that's like, yeah, no, go play, go outside, go play.
Yeah.
But it's kind of like that. It's like you're taking cash, you're buying these V-Bucks to then use inside the game. Mm-hmm. Right, and then it buys you different levels or different things. So it's kind of like how crypto's working, except there's no in V-Bucks. I don't think there's any record inside of the anywhere that's yours necessarily.
Yeah,
forever.
And there's I forget the name offhand, but there's definitely a couple crypto projects that are focused on gaming, trying to make those in-game avatars or shields or whatever you're buying in the game portable. So those effectively become NFTs that you could turn around and buy and sell and move to another game. So
it's stored in blockchain that a 9-year-old has bought.
Yeah, so the legality of that is probably questionable, right. But I guess the portability of it and making it where could be a marketplace that you could sell them in, not just that's owned by the gaming company, or that you could go out to in quote unquote open market, or maybe you can transfer one shield for a different shield on a different game. I don't know. Right. I'm not a gamer, but so there's interesting things being done.
But then for a long time we kept hearing that Bitcoin is supposed to be the new gold. Mm-hmm. It's liquid gold or virtual gold, whatever you want to call it. But I wouldn't say gold's never moved as much in price as Bitcoin has, at least as fast as Bitcoin does. So right. I have a hard time thinking that it's a storage. You put money there, you put your savings, your emergency savings has to be in Bitcoin. That doesn't make a whole lot of sense to me.
Yeah, Bitcoin is very speculative. Gold doesn't feel speculative to me. Like it feels like it is what it is. And yeah, it does maybe go up and down in price, but there's thousands of years of history with gold. Bitcoin is like, 12 or 13 years old? So,
well, as far as what people actually know what it is,
it's 5 years old.
Yeah, it's only 5 years
4
old.
years old.
Right.
So, I've had many conversations recently with people like, if I'm worried about inflation coming, is Bitcoin a place where I can get some shelter? I'm like, you're going to hear both sides of that story, and I don't know personally. All I know is Bitcoin has never existed in a high inflation environment, so no one knows what's going to happen.
Yeah.
People can speculate all day long, and you can basically, based upon their answer, you can tell if they're for or against Bitcoin very quickly.
What I find interesting is that Bitcoin, I think most of the major cryptocurrencies seem to be this way, but Bitcoin especially, it moves with the market. So if the market is at all-time highs, Bitcoin seems to be at all-time highs. If there's a major sell-off in the market, there's a major sell-off in Bitcoin. I would love to know more about that. And maybe that's something we can research more. But I think it probably has something to do with flows.
I mean, the rumor in the crypto community is when the market's down and people are getting margin calls on that side, they're going to go to maybe markets that are really liquid and that are speculative, and they just get their cash to go cover a margin call. I don't know if that's true.
That's a lot of people borrowing money to invest in stocks, which I will add, that's a very bad thing for most people.
Yes. But so, for the longest time, people wanted to believe in the crypto community that it was in some ways inversely correlated to the market. I'm like, but the stock market generally goes up. Like I would actually like it to be relatively
right.
correlated personally.
Right.
I'm not looking for the
I think
the inverse
7 out of 10 years, typically the market is up.
Right.
So yeah, if you had something that went down when the market was up, that would be bad.
Those are long bear markets if you're
right.
looking for the inverse there. But it's, I think that narrative of it's inversely correlated was put to bed when COVID markets crashed and everything crashed. It was just kind of like, okay, no, you can't like legitimately make that argument in my opinion anymore.
Right.
So
again, we would own Bitcoin because we feel like that Bitcoin would be something, it's going to be something in the future, a part of our lives that we don't maybe fully recognize yet.
I would swap Bitcoin with crypto there. Bitcoin was definitely the first mover. It has the biggest market cap. It's the name brand, effectively.
Right.
Long term, what's its utility? I'm a utility guy. Like, I want to know what something's going to be used for. I'm not just here to speculate. I'm not buying NFTs because they're cool JPEGs. That's not who I am.
Right.
I want to know why a token, they call them the L1 networks, like what is the utility of those networks? And there's not tons of it right now, admittedly. It's a lot of, basically, crypto's all speculative. I mean, like, if people try to pitch you anything else right now, they're selling you something. But, long term, it's, like for instance, XRP, Ripple wants to use it for cross-border remittance. Ethereum is used to run smart contracts. Smart contracts can be a huge variety of things, whether it's making sure that, it's basically a paper contract written into code, and there's no person that actually has to execute it. It's based upon data inputs that does it. So it's trustless. So as trust erodes in society, crypto becomes more of a draw, in my opinion, because it's just everyone's playing by the same set of rules if you're buying into a particular network. So
yes and no. I mean, currently, same set of rules, yes. But I guess what I see now is a lot of manipulation.
Of the price, yes.
Yes.
Yeah.
And so you have to understand that when you buy even Bitcoin or Shiba coin, if you're a listener, you know what Shiba coin is, then
Please don't.
You're an expert.
Yeah.
But basically, it's unregulated.
Correct.
So you're taking a lot of risk by owning any type of digital asset such as this or crypto. So you just have to understand that can you lose everything in a crypto? I mean, especially the no names, the stuff that there's a chance.
Effectively, yes.
But I would say with Bitcoin, the big top four,
I don't even see top 10 potentially. Yeah.
I don't really necessarily see that. Okay, I mean, it might be worth less.
So
it's not like we're talking about things going out of business, but what's going to happen? What I see the risk is most investors are emotional, and they take the wrong action. So what they do with the S&P 500 is probably no different than what they're doing with crypto, or potentially.
Yep.
So you have so much volatility. You can put $500 in, and then a few hours later, it could be worth $250.
Or $1,000.
And then you go, right. But then you go, oh my gosh, I lost. Okay, I'm going to get out. And then price goes way back up again. What do? They buy more at the top, and then it goes back down, and they sell more at the bottom. So it's almost like something you have to say, this is kind of a neat concept. I've read about it. Could be something really big in the future. I'm going to put $10,000 in this, and you just wash your hands and walk away.
Yeah. You buy some diversification. You buy the top 3, top 4, top 5, something, and walk away. Not only do I buy crypto for the long term, I do some crypto trading. I've learned a lot about my own personal psychology when it comes, just like you were talking about the ups and downs. You get those ups and downs in the stock market at a much slower pace. Like, it takes months, years to kind of learn, I think, the lessons you can learn in crypto in 3 months.
Right.
I mean, it's, like I was saying, Bitcoin's down 23%. I mean, what was the crypto? What was the COVID drawdown? 30-something%?
32, yeah.
32%. Well, you got there, and that was just a small little blip on the way up, basically.
Right.
The crypto world. So it's just, I've learned to, almost detach from it, find it entertaining. I laugh at it when it's you can be grumpy about it because you're like, oh, my portfolio is down X number of dollars. But at the end of the day, those are the opportunities when maybe you have some cash in the sidelines. That's when you buy. Right. So those are some of my best trades. I've added to them during these drawdowns, and it's kind of like, I'm not happy in the moment, but I'm happy a couple weeks later or a month later, whatever it may be. Psychology is interesting.
So how we invest in it is challenging as well. So as a financial advisor here at Wiser Wealth, we don't invest in any kind of crypto. It's not because I think it's a bad investment. One, I think our client base, which is more slow and steady, wins the race, right? That's always been our philosophy. We use low cost index funds. Average cost of our portfolios is less than 0.1%. Everything trades for free, right? Always tell people you're not paying for asset management. Asset management is free now. You're paying for planning. That's the part that most people are missing. The reason why we don't use it is because there's not a good vehicle for that right now. If we have qualified investors, net worths over $1 million, excluding their home, you can get into the Bitcoin Trust, but it requires a lot of paperwork. You're paying over a 2% expense ratio, and you're paying a 20% premium to buy Bitcoin on some days.
Yeah, GBDC in particular.
We're correct. Then now we've launched this or ProShares with the Bitcoin Strategy ETF, BITO is the ticker. It launched in October with lots of fanfare. CNBC had the price posted on their front page for several days, but it's down 14% or almost 15% since its launch. Since its launch, Bitcoin's down about 4.5%. So what I find interesting in this is, once again, the market, meaning providers, along with the SEC, has provided a product that I think is confusing to investors. That when you buy BITO, you're not actually buying Bitcoin. You're buying the future price of Bitcoin. You're buying future contracts. You don't actually own anything.
Right.
So, it's no different than low volatility funds, especially leveraged ETFs when they were launched back in 9 and 10, that people didn't read the prospectus and didn't understand how it worked. And so they bought an inverse fund. So if the market goes down, it goes up 3 times that. But yet they lost 16% in the financial crisis. And they're like, I don't understand. The market was down. It doesn't reset annually. It resets daily. There's more up days than down days. Right? Typically you have huge down days and then you have these small incremental up days. So in order for a leverage ETF to work, you have to trade it daily. You can't trade it. You have to buy it when the market opens and sell it before the market closes. Who does that, right? So again, not to get on that tangent, but we have to understand what we're investing in. And I don't think BITO hits that criteria right now. So we're still waiting on a Bitcoin ETF or even a mutual fund that actually owns the trust or actually owns Bitcoin to be able to launch this. And theoretically, if we bought a Bitcoin ETF, or I'd probably prefer a basket. Give me a top 5, top 10, right?
Basically like SPY.
Yeah, exactly.
Give me an SPY.
Let me diversify this a little bit. And ideally, I'd want to buy that and maybe keep it around 1% of the total portfolio.
Yeah, it's there's a lot that has to happen before I think we get, especially like an ETF of a bunch of things, or even of the top 10. US, every time I'm on this podcast, people probably remember, like, I just beating the regulation drum. Like, the regulations have to come. Bitcoin and Ethereum have the quote unquote most clarity, but it's really murky. Everything else is just muddy. Some stuff as a US investor you can't even buy, but I could sign up on a South Korean exchange and I can buy them as a US customer. Like, it's just kind of like, but they don't allow US based exchanges to sell things. So it's, with 13,000 cryptos, there's bound to be these nuances, but even in the top 250 biggest ones, it's I use 5 different exchanges to do my trading. So,
oh, wow.
Where
most people would just go to Coinbase, but a lot of the things that you're after don't exist on Coinbase. Is that right?
Coinbase is nice because it's an easy on ramp to get US dollars in. It's one of the 2 on ramps I'll use for dollars. But Coinbase's fees aren't the lowest, but they make it the easiest to get money in. So I was just looking, Coinbase.com, they charge 0.5% per trade. So, okay, I mean, that's not terrible.
Right.
Especially if you're buying for the long term, you're never going to notice it. But that's if you already have the dollars in there. So if you wired money in or you did an ACH, you can use a debit card. They're going to charge you 3.99.
Wow.
They make it super easy.
Yeah.
And then, the fees can approach 0 if you're doing trading, which I'm not suggesting people do, but they can't approach 0 with the more volume you bring. So, Coinbase is definitely the name brand. It is the only U.S. exchange that is publicly traded. You can buy their stock if you want. So that's one way to get exposure in a brokerage account to the crypto market if you're interested. So
yeah, well, you have new players now. You have PayPal, which is you can buy coin through, and then I guess you can still do it at Robinhood, right?
Robinhood has a very limited basket. I think Bitcoin, Ethereum, and Doge. I don't know if it's more than 3.
Okay.
Maybe I can't imagine it's more than 10 of them. If it is,
and there was another one that you told me about a long time ago that you can still buy XRP.
Oh, that would be Uphold.com.
Uphold.com.
Yeah.
That's right.
So they just have decided that they're going to take the risk of doing something they shouldn't, but in reality they're doing something that's just fine. The XRP case is moving along. The Ripple case is moving along, and you're in the clear. So
are the Uphold fees similar to Coinbase?
They're higher.
They're actually higher. Okay.
Yeah, Uphold acts more like a bank than they do an exchange, and that's probably not a super clear analogy, but they charge higher withdrawal fees when you're withdrawing crypto to a crypto network, not necessarily to dollars. Quite honestly, I don't use Uphold in any of my trading or buying these days, but they're an option. There's another one called Kraken with a K. That's another one that I use that's got decent fees. So
let's go back to the regulation a little bit. What are you seeing right now? Any big changes in the U.S. and their approach to this? Because from several standpoints, one, the legitimacy of cryptocurrencies, but the other one is even the tax surrounding it. Because right now, by my understanding, if you bought Bitcoin at 50,000 and it's fallen, or say you bought it and you put in 50,000, it falls to 25,000, you sell it, you have a loss. Then you buy it right back instantaneously.
There's no wash trading. Yeah, I mean,
and it goes back to 50. Now you have a gain, but you have you just created a $25,000 loss on paper. You can't do that in securities.
Correct.
But you can do that in.
I'll tell you, I do this once a month with my trading basket. I'll look at it and I'm like, okay, these are down. If it's down over 5% of them, I'll go through the exercise in each one of them, collect my losses because I'm trying to offset gains that I have so far for the year. So it's like, but yeah, it's the same tax treatment as stocks in the sense, but you can actually do wash trading on top of it. So you get your short and long term gains.
At least on Coinbase, what I find is they don't readily tell you what your basis is. You almost have to track it yourself.
You really do. Even if you're staying only on Coinbase, they're not going to tell you, at least not in a super clear way. I do use outside software that helps from the tax side. So it pulls in data from all the exchanges because I might buy it on one exchange and for some reason move it to another.
Oh, yeah.
So good luck keeping track of basis.
Right.
So this kind of does all that. And at the end of the year, I forget what the form number is, but like produces a tax form number you can give to your CPA. So
yeah.
It kind of helps you, give you guidance because like throughout the, within a trade or throughout the year, you want to understand where you're at with basis for each one. You're like, oh, I'm down or I'm up, or you have buying at different times. So what is your cost really?
Right.
All that good stuff. So, but it's regulations are interesting because Congress is starting to. I wouldn't say they were sleeping before, but they're starting to wake up now. You're starting to hear more so senators from I think the Financial Services Committee be vocal about it. Really towards the SEC because we have this futures ETF for Bitcoin. We don't have a spot ETF, and that's what really everybody wants. And then once that happens, then I think you'll start seeing a spot Ethereum ETF, and it'll really start opening up. But the SEC's like, nope, we're not doing it. They had 2 applications that were submitted after the first Bitcoin futures ETF launched, and they were immediately denied. So I don't know if it's political. You could make all sorts of reasons up, and maybe some of them are true, but Congress is slowly starting to pay attention, and they have a lot of learning to do. They're not the most tech savvy people most of the time, and this stuff can get technical. And then you wrap in like the IRS wants their stuff, the SEC wants to govern everything. There's a bunch of nails out there for their hammer, is the way they see it.
I almost wonder if they're looking at it from the standpoint of if you create a Bitcoin ETF, I can't imagine how many inflows like. The AP, that's the authorized participant that creates liquidity for these markets. Think about it. Not only do you have to buy, but they actually has to physically go out and buy Bitcoin. Like I don't even know how you would do that in a very efficient.
I mean, Bitcoin is the most liquid market of all crypto, and it would be rocky at first. There's no doubt. I'm going to get a little over my skis here,
but it would not push the price. That event alone, you think would drive the price?
You would think. Every time I think I understand how prices move, I'm wrong.
It would take some institutional trading. Not individual investors can run things up. We see that with the meme stocks,
sure,
right?
Yes.
But you think about institutional involvement in a Bitcoin ETF.
The volume of dollars or money coming in would be tremendous.
Yeah, you're talking about billions a day.
I mean, again, the whole market cap is 2.64 trillion of all crypto. I think if we fast forward 10 years from now, there's is the top 50 have at least $1 trillion market cap apiece? Probably. I think we're super early in on this thing, but it's a lot of money sitting on the sidelines because they need some clarity from Congress, really, not from the SEC. Some regulations put in place, and I think it's just going to come much slower than everybody wants. In some ways, I actually feel like the slowness is good because we don't want to rock the boat too hard of the financial market and cause a problem.
Right.
You're trying to get this one little dessert at the end, but, the whole thing goes kaboom. So
there's a quick little article. I think I saw it on Instagram somewhere, but this guy had a Lamborghini, early investor in Bitcoin. So his effective cost, to buy a Lamborghini was $116.
Good for him. That also might turn into be the most expensive Lamborghini ever, too.
Right.
On the other side, if it keeps going.
But yeah, so yeah, very interesting. I think we're probably beyond that as far as Bitcoin goes.
Yeah, correct.
But there still could be, as we find a use for that and what the purpose of it is.
Yeah.
Then obviously I still think this could be a good investment. But
yeah,
it's just hard as an asset manager. It's really hard to jump on that bandwagon. And that's why I tell our clients, I said, look, I'm not saying it's a bad investment, but I shouldn't be the one doing it for you right now. You need to do that in your own Coinbase account and limit it to 1% of your liquid assets.
Yeah. There's opportunity. Just like with buying a stock or anything in life, you have to know why you're buying it and what you might want to get out of it and like understand the exit plan. People, I think that you could buy anything, Bitcoin or Ethereum, and all of a sudden, if you hold it for 6 months or a year, you're going to be a millionaire. Well, if you buy enough of it, you could. You could also buy $2 million worth of it and end up with $1 million. So be very careful. So as we increase the cadence of these podcasts, we thought maybe we'd do a little education along the way. Cryptocurrency gets all the press. Cryptocurrency is a vertical off of an underlying technology called blockchain. Blockchain is just a form of a database that is one that you write to, but you don't edit. You just make changes that reflect on top of that. So what are some other use cases for blockchain besides cryptocurrency? Well, public voting. You could have a voting system that as a citizen, you go in and vote. You can go home and you'd be able to see your vote on this blockchain, maybe not with your name next to it necessarily. There'd be some privacy aspects to it. And then at the end of the day, there's no question on how the votes are being totaled. Seems like something might be of interest these days.
I'd love for a small town to...
right. Or a small country start with it.
To try that, yeah.
Yep.
Yeah. Someone just did their local county commissioner.
This seems like the perfect thing for Silicon Valley to do, quite honestly.
Yeah.
Another one is supply chain management. There's a crypto called VET, V-E-T, so VeChain is their name, that they're running a pilot. Their whole thing is helping corporations track things through the supply chain and into stores. So the use case that they kind of talk about is sometimes you'll hear on the news, oh, well, the grocery stores are having to get rid of all of these green peppers because there's salmonella or something on them. There's a lot of waste that happens because they're trying to get rid of a problem, but they don't really know how widespread it is. Mm-hmm. In this VeChain world, they would track each row of produce, green peppers coming from the field and kind of where they all went, and they would know exactly which stores they had to get rid of the green peppers in. Silly, but probably effective in a world where food is becoming
with a good point of sale system, they could actually call the person who bought it.
They could. I mean, if it was tied to an identity, that's a great point. I hadn't even thought about that. And if you have a smart fridge, it could just like laser zap it out of your fridge or something.
Right.
Well, this is similar and basically an NFT, but property deed management. So, all the deeds for property is recorded in a county registrar somewhere. That could all get moved onto blockchain. And then when you go to buy a property, you wouldn't have to pay for title insurance because you actually know who owns that property. There's no question. There's an efficiency in both cost and speed of closings would happen faster. Vehicle title is much the same way. Healthcare records, the portability of them is pretty questionable these days, but making it, there's privacy pieces to it. I know there's some companies working on that. And in a new one that I read about just the other day that really intrigued me was initial litigation options. Okay, that's a bit of a mouthful. So the concept here is of pooling of resources to help file a lawsuit. People are like, okay, scratching their head now. In this case, it may be like a defamation suit needs to happen, but the person that needs to file it doesn't have the money to pay for the attorney. So the idea is you would buy into this lawsuit, and any winnings that happened, you would get your pro rata share of those. There's actually a couple of these happening. I think I want to say that they were maybe in California. I forget from the article, but yeah. So it's super early days on
California or Las Vegas?
Maybe both.
It sounds like you'd have your baseball bets, your football bets, and then your litigation.
Litigation bets. Yeah, prop bet. Yeah.
Right.
That's funny. But the list is probably endless here. But those are just some examples. So blockchain can be used in things that don't directly touch money or aren't money, or value, I guess I should say. It's an evolving space. So NFTs, we mentioned those. OpenSea, like ocean or sea, but OpenSea is the biggest marketplace for these. I know you looked this morning, there was like 23 million items for sale, really JPEGs again, or GIFs or videos. You use Ethereum typically to buy stuff. There's gas fees and all that kind of stuff. But, it's not some place that I spend any time personally, but it is definitely a hot part of the market, the crypto market in general is NFTs right now. So I have a guy that I follow online that he has a daughter. She's like 14 years old, and it sounds like she struggles with mental health. And her counselor suggested that she do some drawing. I guess it's therapy. And I got to see a picture of this. She drew it, and it's disturbing type drawings. And they decided to sell an NFT of this on not OpenSea, but one like it. And she effectively, for the crypto that she got, she basically made $2,300, which is, for a 14-year-old, it's a lot of money.
Right.
And that was the first time she had done it. There's like no name to her as an artist. It's just kind of interesting to kind of see that market out there. Apparently there's people with a lot of money to spend on.
Well, the first virtual home went for what, $500,000.
Correct.
You can't even actually
the metaverse and all that.
Yeah.
I don't quite get it. I like real life. I'm not quite sure how I want a virtual one.
Right.
Yeah.
There's that's a whole other podcast. Is people are developing these whole digital worlds, and I guess what better way to launch that than in a COVID environment where there's still a very large percent of our population that are still in hiding, basically.
Yep.
So
it's unfortunate.
Not in Georgia or Florida, but
yes.
Somewhere
yes.
there's people in hiding.
Yes. So,
well, it's always good talking about this. We could keep talking probably for hours about the different usages and all this, but we'll keep saving some for each week, and we'll monitor the news for this news segment. It's a lot of people out there that say cryptocurrency is bad. There's going to be a lot of people who are disappointed over a long time. But I think I'll go back to say that if you're doing it and you're investing out of curiosity, that's not a bad thing. This is definitely something new, and whether Bitcoin's the future, is it the Betamax or is it the VHS?
Mm-hmm. That's a great question.
Don't know yet. Mm-hmm. So that's okay. But I will say that there is no get rich quick thing, right? There is, and it happens to some people sometimes, but this is not something you want to put all your investments in. This is something that it's a piece of.
Yeah, even if you're doing the 1% that you mentioned, if you go with the expectation that's going to turn into 10%, you're setting yourself up for disappointment. Realistic expectations go a long ways. So
yeah. So it's more. I think it's more investing out of curiosity, a learning process, learning how technology can benefit us going forward. But it should never. I meet with people every day, and this lady came in fairly recently, and it's almost like she was playing cards. Like she even how she described it, her coins, as she called it, and it's like she was in Vegas, and she loves going to Vegas. She loves gambling, and so it was serving as the same kind of, it's giving her the same feelings as gambling, and so there is more to it than just gambling. There's a real purpose and ideas behind all this. So. But just be careful. I'd stick with the name brands if you're a first-time investor. Understand how it all works first before you start going after meme stocks based on, like Dogecoin that doesn't actually have a purpose necessarily.
Correct. And I was about to say stay in the top 10 coins, but Doge is in the top 10. So.
Right. Only because of Elon.
Yes.
And a whole Saturday Night Live skit related to that. But all right. Good talking to you, Robert, and we'll see you next week or next month.
Yep.
Thanks for listening to the Wiser Roundtable podcast. We hope you enjoyed it. Make sure to subscribe wherever you're listening. That way you don't miss out on new episodes. Head to wiserinvestor.com and reach out if you have any questions. We would love to hear from you. Today's episode was produced and edited by Lilton Moore. Wiser Wealth Management Incorporated is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and unless otherwise stated are not guaranteed. Be sure to first consult with a qualified financial advisor and/or tax professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.